Thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9, right here at the New York Stock Exchange. This make or break hour begins with today's market rebound. Let's take a look at the scorecard now. With 60 to go in regulation, the major averages are all higher today following the president saying talks have happened with Iran. A few other details, good enough, though, to send stocks higher into a relief rally. Let's call it that for now. Consumer discretionary names, they're showing that. They're all higher. Airlines and cruises are as well, and they needed a lot of relief, and that's why that bounce back looks the way it does today. How about the chips? Also showing some strength, especially the chip equipment names like Lam Research and Applied Materials and KLA-Tencor. Given today's news, we will begin in Washington for the very latest with our own Eamon Javers. Hi there, Eamon.
Hey there, Scott. President Trump told reporters today that his administration is in contact with Iranians who he says are very representative of the country in talks that went late into Sunday evening. And as a result, he said that's why he's suspending his own deadline of today for the bombing of Iranian power plants, offering a 5-day extension on that deadline. And he said he's considering a post-war power-sharing arrangement with a new Iranian government for sea traffic through the Strait of Hormuz. Here's what he said.
We are now having really good discussions. They started last night, a little bit the night before that, and I think they're very good. They want peace. They've agreed they will not have a nuclear weapon, et cetera, et cetera. But we'll see. You have to get it done. But I would say there's a very good chance.
Now, that came after the president suspended that deadline for the bombing of Iranian power plants, offering the extension. And after he told reporters today he's considering this post-war power-sharing arrangement with the new Iranian government. Now, that's important, Scott, because he said that he and the Ayatollah, whoever the next Ayatollah will be, could jointly share power over the Strait of Hormuz. Not clear, exactly how that's going to work. But we did see the Speaker of the Iranian parliament post a denial on social media today that any such negotiations had taken place, and describing the president's comments as fake news used to manipulate financial and oil markets. The president today also citing the Venezuela model for post-war governance of Iran, saying he's dealing with people he finds reasonable and solid, and telling reporters that the U.S. may be able to find a leadership figure there that he can deal with, and predicted that when the conflict does come to an end, Scott, the price of oil will drop like a rock, but cautioning that he can't guarantee anything. Back over to you.
Do we even know, and I don't assume that we do at this point, whom we had these apparent talks with? I ask it only because a few days ago it was a post from the president saying there was essentially nobody in leadership left to have talks with.
Right. There have been reports over the weekend that Jared Kushner and Steve Witkoff had opened up a back channel of some kind to Iranian leadership. Not clear who the officials are who are speaking on behalf of the Iranian government. You heard the president today saying, he believes that these people are actually in power because he said that when they said something, actions took place in Iran that mirrored what those representations were. But we don't know who he's talking to or who Jared and Steve Witkoff are talking to. And so ultimately, there's some real question about whether those people have the authority to make any promises whatsoever, given, as you say, the level of devastation of Iranian leadership.
Yeah, well, for now, the who, the where, and the when, not so important to the market. Just happy that at least there's a positive development to go on. Eamon, thank you very much.
You bet.
It's Eamon Javers in Washington, D.C. Many stocks on the move today, some in relief and some giving back a bit of their recent gains. Leslie Picker following that for us today. Hi, Les.
Yeah, a bit of a reversion to the mean here, Scott. We're seeing some trades unwind following those comments from President Trump that the U.S. and Iran have had productive discussions, although, as Eamon laid out, Iran has denied that talks have taken place. However, crude lower today, as our fertilizer names kind of mixed, like CF Industries and Nutrien, Intrepid Potash is slightly higher today as well. On the flip side, our energy-sensitive industries, which are rallying today. You can see airlines, United, American Airlines, Alaska, Southwest, Dallas, each up more than 3% in some of that kind of reversal trade that you can see there on your screen. So, one thing that Citadel kind of pointed out is in a note, Citadel Securities pointed out in a note this morning, is that the, quote, reflexive squeeze and short covering bid remains elevated. And the firm saying that as technical and positioning pressures begin to clear, and if geopolitical tensions ease, April has the potential to be a strong month for U.S. equities. So a little bit of bullishness from that firm based on what they see in terms of technical positioning, unwind, and then, of course, those clearing events that the market needs to see.
Yeah. Others, too. Edward Denny sticking with the year-end target of 7,700. So there are others who are just trying to keep their eye on the prize and look past this current conflict. Les, thanks. It's Leslie Picker with the update there. Let's bring in our panel now. CNBC contributor, Fundstrat's Tom Lee, CIBC Capital Markets, Chris Harvey. It's good to have both of you with us. On that note, Chris, you're not buying this, are you?
Not really. I just don't see how this all works out, right? You have a very unconventional conflict. At any point in time, even if you said you had a ceasefire today, how durable is that ceasefire? And how can you confidently say, hey, we're not going to have any problems in the Strait of Hormuz? You just can't have that kind of confidence. Are they trying to make progress? Are they making progress? I hope so. It's not clear to me. But as I look at the situation, it's just not very clear and it's not very clean. And I don't know how you make it durable.
Well, I mean, you also look at the damage within the market and suggest that stocks weren't as oversold as others would like to believe.
Right. So we do think there's double-digit upside to our year-end target, which is 7,450, easy for me to say, right? But are we saying you have to buy them here, you have to buy them now? If you're looking longer term, yeah. But in the short term, I don't see a situation where consumer confidence, where investor confidence is broken, where the situation is oversold, and you have to run to things.
What if we're just making it too hard, and I just came back at you and said, well, the other side is stocks were oversold to the only person who really matters, to the president. They were oversold to the president's perspective, and we've learned this before. We've seen the movie,
right,
and we're living in it.
And that's fair. And what we're doing is, despite what the geopolitical says, we're just rotating the portfolio. At the beginning of the year, we were really risk averse. Now we're taking off some of that risk aversion slowly. We're finding some growth opportunities, and we just move forward as things reprice. The geopolitical is just really hard to predict.
You were with me last week and said the Trump put. You used those words. I didn't, because you were figuring that this was going to happen at some point, no?
Yeah, and I think, well, now we know what could happen in 5 days. I do think one thing we have to keep in mind, and I think investors who think the war needs to end for stocks to bottom aren't studying history. You know, markets will bottom well before positive news starts to develop. In fact, stocks bottom on bad news. So to me, I think what we have to start really focusing on is positioning and how markets are reacting and what's sort of leading. And you know, even Citadel's trader was talking about that today, that there's so much asymmetry and sort of bets on the market falling that it doesn't mean the war has to be ending for the stock market to actually bottom.
No, but the effective closure of the strait needs to be ending, doesn't it? Or else you're going to give back whatever goodwill you've put in the market now.
Yeah, that's right. It's the closure is putting intense pressure on more than just the U.S., right? It's putting pressure on China and the Gulf nations. But one thing that is pretty evident now is the U.S. is faring better than everybody else in this because we are essentially energy independent. We're an exporter of oil. And I know there's confusion on what the Fed should do, but at the end of the day, the U.S. may be in the best strategic position with that strait closed.
Are you too bullish?
I don't know about too bullish, but is the U.S. in the best position? The U.S. is in an okay position. But the issue is Iran is still getting tankers out. Iran is still getting money. Iran feels okay. And the equation is different for them versus us. They just have to last. They just have to survive, and they win. For us, we need something more than that. We need control of the strait. We have to believe that it's going to be durable, and we have to believe that this is over and we don't need to go back in.
So you wouldn't buy stocks until you see that?
I wouldn't buy stocks until the market says that sentiment is a lot worse and the situation is oversold. If you said, hey, I have a 6 to 12 month time horizon, not a 6 week, okay, yeah, start easing in slowly.
But what if we don't get that opportunity? That's what we never know, right?
So when you say you think they're going to keep going up from here?
I'm not saying anything, but what if they do?
Right.
Yeah.
What if all you needed to get to was the president looking for some sort of de-escalation. Others would, have said off-ramp, or whatever it is.
Yeah.
Whatever it is produces what we're witnessing in the market today.
Yeah, all fair. We still have, again, we're looking at double-digit upside. Can we be a little slow and still make money? Sure. Will things play out? We have time to see how things play out. As we look at this, it's just hard to believe that this is over, this is done. And this is not like tariffs where you can say, okay, we can move forward. I've gone too far. I can walk back. There's another party here, and it's not clear that other party wants to come to the table or is willing to.
But I might just add, because as you can imagine, we've had many conversations with institutional investors.
I'm sure all you have.
They're all bracing for a long war. In fact, over the weekend, a lot wanted to short the market into the open today. In other words, they were getting ready to try to bet on a big decline. So to me, I think what Chris is saying, which I don't disagree with, it could be a long war. That's a consensus view in many ways. Nobody is under the illusion it's a short war, but that means that this asymmetry of incoming news could actually be positive. So I'm kind of in the camp that we have to see how markets react. But like today is, if we were skeptical, the market should be going down, but instead we're actually rallying today.
Well, I mean, we have been down pretty consistently, like 4 straight weeks. You talked about positioning, okay? So coming out of this, what do we do? Do we go back to the playbook that we had before? The economy's going to hang in because we're not going to be worried about, skyrocketing gasoline prices. So I go back with the broadening trade. What do I do? Well,
we know investors are worried about growth, so they're going to want to buy growth stocks. That's why the Mag 7, the software, and even crypto have been outperforming. By the way, those 3 groups, along with financials and arguably energy before this year, were in a rolling bear market. That's 70% of the market. So I think the leadership that we're going to see coming out is the Mag 7 software and the crypto.
JPM today, growth slowdown equals U.S. growth stocks in favor.
I think that's right. What you want to do is you want to buy quality growth stocks at the right price. If you look at what's happening with small caps, cyclicals, risk have begun to fade. That makes sense to me. Those are a second half story, but over the next 3, maybe 6 months, it's more about growth because you don't have to worry about the fundamentals. And let's not forget.
But earnings growth, it is about growth. It's about earnings growth.
It's about earnings growth.
And there's still double-digit earnings growth expected. So that's why people are able, in many respects, to look past this and have their eye on that prize I talked about at the top of the program. As long as earnings growth comes into where it's estimated to be, then you figure that stock prices should follow, no?
Yeah, and I think one thing to keep in mind is the driver of U.S. earnings are AI, and that, I would say the use case for AI is stronger if oil is high because every country wants to find productivity. So I think the story for tech is actually stronger because of high oil.
Oh, you answer that too, please.
So that's why we're still expecting the market to be up double digit. However, I think the way you're going to get there is a little bit different than you were before, and I think we have to push certain things back. At the beginning of the year, we were looking at housing. A lot of housing stocks have given back a lot of what they had. Now we're going back and thinking, okay, we're getting another bite at the apple. There's a spot, there's an opportunity, but we really have to dance around. When do we think those Fed cuts are coming? When do we think rates are going to come down? Oh, by the way, first quarter numbers, we had weather, we had the CNN effect, we have higher oil. What are outlooks going to be like as we go forward? Do you really want to be aggressive on that cyclical trade? Meanwhile, the risk reward for a lot of the growthy stocks, and they've come off a fair amount, actually pretty attractive.
You guys aren't that far apart on where you think we may get from an S&P standpoint on the end of the year, but the road there may be a little more tricky. But we'll see. Guys, it's been good to have this conversation. Thanks for being here.
Thank you.
That's Chris and Tom. Welcome back. Tech staging a much-needed rebound. NASDAQ still, though, the biggest loser year-to-date of the major averages. For more, let's welcome in Ashley McNeil. She's head of equity capital markets for Vista Equity Partners. Here once again at Post 9. Welcome back.
Thank you.
Well, good time to talk to you. I mean, give me your just general thoughts on how you view the markets, given all of the volatility, these new headlines, et cetera.
I think that this year has been a tough year because there's been a lot of short-term dislocation that people are extrapolating to long-term themes, which aren't yet really, you can't point data points to just yet. Look, in the short term, I think there's a lot of geopolitical noise that creates a lot of new topics into the frame. You know, we're talking about interest rate hikes all of a sudden. We're talking about inflation again. We're talking about jobs data and slowing growth. These are all topics that, you know, asked a month ago, we didn't think we'd necessarily be in the frame for discussion. That being said, I'm still very, very bullish on everything I can see from my vantage point as far as it relates to AI implementation, the innovation we're seeing. It's the year of you know, AI adoption for the enterprise. So long term, I'm really, really excited about the market.
If we're suddenly worried about growth or whatever else, there's the view that that's good for the growth trade in tech, whether it's mega caps, software, chips, or whomever else.
I mean, a market like this makes software look almost defensive in the short term, if you think about it. It's a great entry point. You know that they're going to have access to this increasing TAM. You heard Jensen talk about it last week. Enterprise software TAM going from $2 billion to $8 billion. We are in the middle of this great recode for software, so it's a really exciting time.
I mean, you have this one stat that the TAM could quadruple to 5 to 7 trillion, is it with a T? By 2030?
Well, if you think about software as a service transforming into software as the worker and being able to not only provide productivity tools for these workflows and digitizing these workflows, but now being able to execute, you all of a sudden open up this TAM that wasn't initially available to software companies.
Man, software as the worker, that makes people nervous, right? Thinking of the software is gonna, these agents are gonna take my seat. That's how they talk in the business,
Well, I think we're a ways from that. I think it's more about software providing the guardrails to allow certain workflows to happen and ensuring that these workflows that are very bespoke to a lot of enterprises are executed in a very deterministic or rules-based outcome.
Okay. Has software bottomed? Do you think it has or not? And if so, or if not, why?
I do think it has.
Okay.
However, I don't think that we're straight lining it up. We are in the middle of this messy middle where we're transitioning from AI enablers to AI adopters, and invariably in that transition, we're gonna have moments of delays and or step backs as we think about how do we hold enterprises accountable for adopting this technology, and what are the key performance metrics I should be looking at? You saw in Q4 that was reported earlier this year, you saw some of the software companies produce metrics that allow us to be like, oh, look, they are implementing AI, but there's still so much more to come and so much more to learn, and there's a fair amount of uncertainty. Whenever there's uncertainty, there's gonna be market dislocation.
So how can we be sure that they bottom, that the multiples don't need to reset even further to reflect the concerns about what lies ahead for many of these companies?
I think as a broad asset class, I feel very comfortable being like we are close to a bottom. I think there are going to be individual stock prices and software companies that maybe have further to go. Software is going to break up into 3 buckets. We're going to have software that becomes the agentic enterprise solution. So that is the agent doing the productivity tool and the execution tool. Mm-hmm. Then you're going to have software companies where the solution set doesn't need to be agentified. So you're going to have AI built into them performing businesses so that they can provide you with a solution set quicker, faster, and cheaper. And then finally, you're going to still have some software companies that lose the right to win, and those are still being figured out in the public markets to some extent.
I guess we'll see what happens. It's good to catch up with you as always, Ash. Thank you.
Great to see you.
That's Ashley McNeil, Vista Equity Grew Up Next, a Closing Bell exclusive interview, Double Lines, Jeffrey Gunn, right here on Closing Bell. We'll do the market zone now. Mike Santoli and Renaissance Macros. Jeff DeGraff are here to break down these crucial moments of the day. Mackenzie Segallo's digging into a big call today on Microsoft that we need to discuss too. But Mike, I'll give you the first crack here. I mean, it obviously is a nice rebound. The market didn't need to see much to do what it's doing today either.
Not a lot, just a little bit of a slightly open window to something that makes it seem like we could work towards some resolution. It's a reminder, upside risk still exists. Now, I think you could squint and say, well, the S&P, all it did is go from one round number, 6,500 up to 6,600. All we did is get back to where we were trading Friday morning, roughly. So maybe nothing has been accomplished. We fell short of the big kind of moving averages and resistance lines. That's fine, but as a first step and maybe as a way of reminding people that the market market is going to be antsy to move on if it's given a good excuse. I think it's okay for now. Certainly the stuff beaten up the most was the stuff that bounced the hardest. So you're going to have to prove this over the course of a number of days here.
Yeah, you guys, I know we're going to tackle this at 4, right?
Yep, absolutely, all of it. As well as gold, what's happening there?
Oh, yeah. Yeah, that's been a pretty stunning move in the opposite direction of where the trend has been. Michael, thank you. It's Mike Santoli. We'll see Mike, of course, in Mel, top of the hour and overtime. I want to call your attention to shares of Estee Lauder. They're falling after the Financial Times reported the company nearing a deal to combine with a Spanish beauty company. The deal could be announced as early as today, would create a cosmetics behemoth valued at more than $40 billion. We'll stay on that story, too. First, though, we get to Mackenzie Sigalis on that Microsoft. Well, it was not a downgrade, but a target downgrade by a well-known analyst.
Right. So Melius analyst Ben Reitz is out with a tough note this morning, cutting his Microsoft price target to $400 from $430. Reitz is saying AI waits for no one, pointing to last week's Copilot reorg as a sign of strain. Mustafa Suleyman moved off the product, new leadership coming in, and the possibility of legal action against OpenAI, the same partner tied to roughly 45% of Azure backlog. Melius also raising concerns that fixing Copilot could force Microsoft to devote more of its own cloud capacity to itself, limiting the upside bulls expect from Azure. And with shares carrying a premium, CapEx rising, and 55 buy ratings already on the name, Reitz says a lot of that pressure is still not priced in as Microsoft risks a 6th straight losing month. Scott?
All right. Mac, thank you. Mackenzie Sigalis. All right, Jeff. Are we oversold enough that this is justified? Where do we go from here? What do the charts tell you?
Well, there was, I don't want to get too complicated here, but there was a pretty big short gamma position on Friday, which was expiration, kind of gave you a vacuum of 100 points, and we got that, and now we're rebounding from there. We got just slightly oversold. Percentage of issues above their 20-day moving average got down to 12%, which is a good number. The externals were oversold barely. But we really didn't have the same type of triangulation we like to see. So I think this is noisy. I think we can rally it to call it 67.33. And I think we're going to have at least a retest here. We're not seeing anything that really changes the evidence as far as we're concerned. So I think there's more work to do here.
Yeah, we're giving a little bit back, too, as we move into these final moments of the trading day. You're looking at gold, and I don't know if you had a chance to hear Jeffrey Gundlach with me just a few moments ago suggest this is a good entry point now with this pullback. You agree with that?
I think it's a trade. I think it'll rally. One of the things that we haven't seen, it's certainly oversold enough to rally, but it's been in a bubble watch for us, Scott, for 3 or 4 months now. And so usually these are long aftermath types of conditions. I mean, keep in mind in the 1970s, the middle of the 1970s, gold had a 47% drawdown. Didn't change anything about the narrative, didn't change anything about, all the problems and inflation and everything else that was there. So tactically, it's really important to just keep your wits about you. And I still think that there's more work to do. One of the things I would just mention about gold and even within the ETFs, we're not seeing the same type of liquidation or outflows that usually tend to mark a bottom. So while we do have some oversold conditions, we don't really have the sentiment set up yet where people have kind of become disgusted with holding on to the asset. Usually that's the case, particularly in a bubble environment where you've had such a big run that by the time, if this just ends up being a consolidation, by the time that you're done, you see that type of disgust that is, music to our ears that gets us to step back into it. So I think there's more work to do there too.
All right, I'll let you run. We'll talk soon. I know that. This is Jeffrey Graff.
Thanks.
Renaissance Macro. They're going to ring them in a second. We will go out green, obviously, across the board. We had a nice, strong rebound today. We've given up about half of the strongest level for the overall market, but we'll still have 1% plus gains across the board on news.
Hey, everybody. Welcome to Blue Cloud Trading. I'm George. It's Monday. It's March 23rd, 5:36 p.m. Eastern Time. The market was up a little bit today. It was the Dow was up 1.38%. So was the NASDAQ. S&P 500 was up 1.15%, and the Russell 2000 was 2.16. Well, when I saw the market early this morning popping pre-market, I was a bit suspicious. I'm not going to lie. I had to find out what was causing it, right? So I ended up doing some research, and on my X page here, I posted this article at 8:28 a.m. this morning, okay? Because I found out that the Iranian officials denied direct or indirect negotiations occurred with the U.S. So Donald Trump had announced he is postponing the military strikes on Iranian power plants for 5 days, claiming that he had very good and productive conversations with Tehran to resolve the ongoing conflict. The question is, who specifically did he have negotiations and conversations with? And if he's eliminated all of the leadership in Tehran, then who is he talking to? Imaginary, leaders? I'd like to know the specific names, actually, right? It would just make sense. So, while the Trump administration maintains that productive dialogue has taken place, Iranian officials and state media have explicitly denied that any direct or indirect negotiations occurred. It didn't matter. When the posts come out, the market reacts immediately. The market's moved up. Now, I do want to show you guys something, though. We're going to take a look at the charts, and the charts are going to show us something very interesting. For example, let's just start off with XOP, which is the SPDR, S&P Oil and Gas Exploration and Production ETF. If you look at the news articles that came out today, it was just absolutely ridiculous. Check this out. Let me just show you a couple of those news articles. I just want to show you throughout the day. If we just go through all these, I'm going to zoom in a little bit. Oil plummets as Trump says U.S. held productive talks with Iran. Now, this article came out at 10:24 a.m. Oil slide. Oil prices slide as U.S. expands influence over global energy markets. Anyway, throughout the whole day, that's all we were reading. Volume in stock and oil futures surged minutes before Trump's market turning post. So there was a little bit of fear in the markets, and so he came out and posted that with the hopes that it would that the market would react, and it did. The stock market reacted. So look at XOP. What we saw, and I'm just going to show you guys this candlestick here. So here we were on Friday. This was Friday's candlestick. As you can see, oil and gas was moving up. What happened? Okay, boom. Throughout the weekend, price had dropped significantly, right? And look at this. Towards the end of the day here, if we look at the 3-minute chart, this is what it looked like. So we had a drop after the announcement, the pre-market announcement by Donald Trump. The oil stocks dropped, but then they spent the rest of the, once they realized that this was basically more of a hoax situation, okay? As you can see, price of oil started to move up. And by the way, S&P 500, it had that initiated move up in the morning. You can see here the gap up, price moved up to this level. And then what happened from this high? And that, by the way, was around 11:09 a.m. Price dropped approximately 1.08% from that high at 11 a.m. The Qs, the QQQ ETF on the 3-minute chart, did something similar, gapped up, and right around this point here, around 11:09 a.m., the Qs dropped about 1.13%. Same thing with the Dow. Gaps up, reached this level, 467, dropped 1.1%. Okay, Russell 2000, that had a big move up originally, right? So it basically had gapped up from this point all the way up to this point right here. And if we measure from this level, around 11:15 a.m., to that point right there, the Russell 2000 dropped 1.58%. So don't get too excited. Don't get too excited. And as I show you guys these daily charts, it's going to be even more clear as I get into this. Okay, so let's start off again with the XOP, which is the oil and gas exploration. So, this is just a 1-day pullback. By the way, we've had these before. Sometimes we get 2 days. All right, it's possible we might get an extra day tomorrow. The point is, if price still remains above the 9 period here, the Tenkan-sen, expect price to continue to bounce and continue to the upside. All right. There haven't been any real big changes happening as far as the change, as far as what's going on in the Strait of Hormuz. That's still all locked up pretty much. Let's look at the VIX. The VIX spiked and then it dropped. It is down 2.28%. At a level of 26.15%, but still at very elevated levels here, 26, which is not an ideal time. Look at this. Look at all this, the range of volatility that's happening from the low there to that point right there. That's a 53.4% change, which is crazy. Let's look at the S&P 500. Okay, So here the S&P 500 dropped, and as I mentioned last week on Friday, guys, this is a broken market here because we got under that 650.85 level. We created a lower low from this level, which was very substantial and very important. Now, I want you guys to notice the candle that has formed here for the S&P 500. This is very important. It's a shooting star type candle, all right? Price gapped up, continued moving up. It touched the 9 period. That's called the Tenkan-sen right there, all right? The midpoint, the last 9 periods. It touched the 200, which is that dotted yellow line, and price dropped. It's certainly not a bullish scenario that we're seeing here with the S&P 500. And if you look at the weekly chart for the SPY, we're still under these moving averages. I mean, the only positive thing that kind of occurred is that we got back above that 650.85 level. But I think that's going to be short-lived, honestly. Here's silver. SLV, which is, okay, this is interesting, isn't it? Check this out. Silver actually was up 1.54% today. One of the metals. Now, gold didn't do so well, as you'll see in a second, but I think that's kind of interesting that silver stalled here. The QQQ ETF. All right, this one too, it gapped up on the news, right? Remember, the market moves on news. But then once the news is disqualified, price drops. And that's the selling started to happen. And if you look at again, you just look at that 3-minute chart, you can see it very clearly from those highs at 1109. All right, it dropped. So technically, we were up 1.02. Technically, at least for the Qs, we did hold up above this 580.74 level, and we got back above 583.38. However, I wouldn't, again, get too excited here because we're still under the 200. We're still under the Tenkan-sen, the 9 period and the 26 period. We're still under the cloud. This is bearish territory, obviously. We're in a downward channel. That's a downward channel that you've seen right there, okay? So don't get excited. Russell 2000. This is interesting. Check this candle out. Do you see that wick, the long wick at the top? Okay, things were looking, obviously the market pushed price up to that level. The high there today was around 251.36, and then the bears came in and they shorted that thing down, got right back under the Tenkan-sen right there. So Russell 2000 not looking particularly bullish here. What about GLD, gold? Okay, now gold has had a big decline here recently. It's really an unsubstantiated decline, in my opinion, based on the fact that we are at war with another country, Iran specifically. Gold prices typically do well in times of war. And, you know, as one of the guests on Closing Bell mentioned, you know, it isn't really dropping that much. I mean, right here, we got ourselves a doji. A doji represents basically what it represents is indecision, the buyers and the sellers. Okay, the opening and closing price was around the same level today. I think there's a higher probability tomorrow, especially after seeing silver moving up 1.54%, that gold is going to move up. I can't say if it's going to break that 422.55 level, but I think this might be potentially, and I'm going on a whim here, I think this might be a little a short-term bottom until it comes back up to the cloud itself. We'll see if I'm correct on that. All right. In fact, I'm going to circle it right here, and I want to see how gold reacts tomorrow, and if I'm correct about this assessment of mine. Volume has been coming in. Yes, gold prices have come down, but I feel like also there's not a whole lot of places to be invested in right now. And once people recognize that this is all just fugazi, as they say, right, in the movies, then you're going to realize they're going to start, the market's going to drop, and they're going to start looking at alternatives. What about FEZ, the Euro stocks? This one also popped up. This is the European 50, all right, stocks 50 ETF. It's FEZ is the ticker symbol. This one popped up. It got back above the 61.42, but this also has been a broken stock for a little while, or ETF, sorry, and it's still technically, folks, under the Tenkan-sen, under the Kijun-sen, under the cloud, and under the 200-day moving average. So we're still in bearish territory here. All right, it's just a one-day up move. And remember, you can get those even in declining markets. You can get those up moves. Here, we had one right here. How long did that last? 1 day, drops. Right here, price gapped up, got up to that level, came close to the Tenkan, and what happened? It dropped. Guess what? Price did it again over here. Dropped. It did it again here. And then it formed a reversal candle. All right. So just keep that in mind. Dow Jones, same situation here. Now, what's interesting is like last week on Friday, I think I probably even said this. I'm sure I did because I was watching this level. This 454.96 level was actually created back on January 28th. Take a look at the creation date in that little box that pops up there. Created January 28th, okay? So it's based on that 454 level is based on that low right there that you see. Price came right down, touched it, and I said, guys, there's a higher probability that we're going to get a little bounce here potentially. But I never thought that would be anything substantial where it's going to start taking off. There's nothing underlying to make the stock market start taking off now. There isn't any positive news here. There aren't any earnings positive things going on with the earnings calendar, and this was just a little fake out, I think. And as you can see, this is a reversal candle that's just formed here. Let's look at that 3-minute again on the Dow. Okay, there's the pop up, short-term move. People start digesting the information. They start realizing, oh, Iran's not really making any negotiations. That was all bullcrap. Okay. I think we're going to start selling this thing off. And it dropped, like I said, about 1.12%. All right. Now, let's look at the Mag 7s, which were all up today. But notice how there are no blue flags here, which means they're still not looking positive according to the charts here. If we look at the daily chart, let's look at Apple in the daily. All right, so it found support at a level where it made sense on Friday, right? It stalled at the 200 and it gapped up based on the positive news that early pre-market, right? What happened? Price opened right at the 9 period, the Tenkan. By the way, guys, just so, for those of you who are unfamiliar with this indicator, a quick little synopsis. The green line here is basically, it takes the midpoint of the last 9 periods and plots it right there. The red line is called, and that's called the Tenkan. That's called the Kijun, the red line, or baseline, and that takes the midpoint of the last 26 periods. So it's the longer longer term average. So the faster one is under the slow, that's bearish in itself. Then you've got the cloud itself, the Ichimoku cloud, which is comprised by taking the midpoint of these two moving averages. Let me just show you here. Okay, the red line and the green line. And if you take that absolute midpoint and you project that 26 periods into the future, that's where the Sinkuspan A is. That's the light colored blue line that you see right there. And that projects into the future. And then you get the Sinkuspan B, the other part of the cloud, the purple line. Okay, that's based on the midpoint of the last 52 candles here. In this case, 52 days. All right. And instead of plotting it above or below the candle, the current candle, it plots it actually into the future, creating the future cloud. Very unique indicator, incepted in the late 1930s, okay, published in the late 1960s and brought to the West sometime in the 80s. And it's basically used in many financial institutions to help identify the strength of the trends. By the way, there's one more line I forgot to mention, the Chiku span, the white line that you see there, the lagging line. That's the current price. Let me zoom in a little bit. It's the current price right here, the closing price, projected 26 periods into the past. Why is that important? Why do they project that out there, and why do they make it into a line form? So it's easier to see, number one. If you threw Japanese candlesticks one on top of each other, it'd be like a mess, right? But basically, the idea here is to see where that is in relation to the candle 26 periods ago. If it is under, that's very bearish. If it's above, it's bullish. Okay, and sometimes you'll have the crossovers, especially when the cloud itself, this indecision here with Apple, you can see a lot of crisscrossing happening. When you see that the cloud is going from a bullish state where the Sinkuspan A is above the Sinkuspan B to where it drops under right there, okay, you get a crossover, and then another positive crossover, and then another negative crossover. That's telling you that this is we're basically in what's called consolidation, right? There's no direction. There's no clear direction in Apple. And so therefore, it just makes sense to maybe hold off especially with all the negative news that are happening right now, until we get some resolution on where things are moving into the future. So Apple, not liking it here. It's under the Ichimoku cloud. Amazon, also under the Ichimoku cloud still. Google, under the Ichimoku cloud. It was up 0.41%. Okay, nothing special happening. Consolidation, right? Meta, okay, it moved up 1.76%, but what is that in the scheme of things? Nothing. Look over here. We had a move up here. We had a move here. We had an up move over here. This whole time, everything was negative as far as the Ichimoku was concerned, right? Microsoft. Okay, now this is more, it's interesting. I wouldn't be shorting Microsoft actually here. I would not be shorting Microsoft. And the reason is because it actually found support here on Friday on that candle. And it actually held above that today on Monday, around above that 381.71 level. So, and there were some positive news that came out about Microsoft, okay, as they discussed on the show. So we might potentially see this moving up, but I still wouldn't, put all my eggs into this, and I wouldn't be jumping into this quite yet anyway, because it's still technically in a decline. It's under the Ichimoku cloud, but I wouldn't be shorting it, is what I'm saying. Don't be shorting Microsoft, betting against it. Netflix. Oh, this is interesting. Okay, so Netflix finally emerged once again, right? This is the first time it emerged above the cloud right there on that candle, but it was still under the Tenkan. It emerged the second time above the cloud, okay? And it's still under the 9 period, the Tenkan. It needs to break above that green line and close above it, in my opinion, before we get some bullishness on the daily chart. But do we have confirmation on the weekly chart, which is very important as well? Let's find out. The answer is no. So looking at the weekly chart, you can see that we've been in a decline. We came up, we touched the bottom of the cloud here, and price retracted. And now, yes, we're getting a bullish harami that's slowly forming here with Netflix. And we might see it move up and retest the cloud once again. And that we might even see a move up 7% or so before it finds resistance on the weekly chart if we break above that Tenkan. And then we also have that 200-day on the daily chart. That's about 13% away from where we currently are. So it's a declining 200-day. So Netflix is looking like it wants to, right? It needs to get through that cloud, right? You can see that bullish flag that's forming right there. That's a bullish flag. And so I think Netflix has some potential here. But yeah, I don't know. I mean, again, looking at the weekly chart, I wouldn't be jumping in here. Unless you're looking for a short-term trade, then you focus mostly on the daily. You switch it to a 2-hour time frame. You wait for the 2-hour to give you the confirmation, maybe, or maybe, the 30-minute chart is still technically inside the cloud here. It's under the 200. There's a little bit of work that needs to be done with Netflix, but the fact is that the daily chart, it seems like it wants to emerge here. And we do have a future bullish cloud. And if you look at the directional movement index here, the positive DI did cross above the negative DI. So that's also positive. NVIDIA is still in a consolidation stage. It's still under the 200-day moving average, but it was up 1.62%. Again, don't get fooled by percentages here. Pay more attention to the charts. The charts don't lie. They will give you a much better interpretation of what's truly happening in the market, all right? Because this can be very exciting to see the market moving up so much, in all these stocks in one day. But don't forget about we have a short-term memory about how things looked, last week, right? Or the day before, right? So that we have to pay attention to the whole picture. Tesla also moved up 3.48%, found some support at that 367.71 level, but we're still in a decline here. And it doesn't look particularly bullish in any way, shape, or form, but at least it stalled at that 367.71. So maybe we'll, retest that 387.53 level, and we'll see if we can get break through that. Now we're going to look at some of the stocks and ETFs discussed on the show. I actually added a whole bunch of new ones. Like I went into and I looked back at all the old sector ETFs. Now, when I do my analysis each weekend, I don't use these ETFs, to do my sector analysis. It's based on more robust sector analysis of more stocks, because these stocks like XLB, for example, when you look at the overall component watch list, it's only comprised of about 26 items. All right. When I'm doing my analysis on sectors, it's like hundreds of stocks within the sector, in all of these, the financials, the industrials, whatever it is. So you're getting a better picture. And so I did post a members only video, guys, this weekend. Real quick, let me just show you before I get into the stocks trio. This is actually last week, but this is the new one that just came up one day ago. So you may want to consider becoming a member if you want to get access to this video that was just posted over the weekend. It's an hour and 13 minutes long, and I do a much more thorough analysis of not just the sectors but also the industries. Okay, and then I basically shared 27. I shared 27 new stock ideas for this week. I actually added a number of those stocks from my watch list today because they were looking good and they're in strong industries, and that's what's most important, that we're buying stocks that make sense, because this is not the time to be buying the index. In my opinion, you want to hold off on that. This is the time, however, to like be a stock picker. It's a stock picker's market. You have to be very selective. Okay. All right, let's get back. And by the way, to get access to that video there and the other ones, you'll have access to all of them, of course. So you'll be able to see all of them. You click on this button, the join button. All right. Once you do, this will pop up. And then what you want to do is actually, select Blue Cloud Trader, Blue Cloud Legend. Okay. So under one of these two, either Blue Cloud Trader or Blue Cloud Legend, and you'll be able to access those exclusive member-only videos. If you become a Legend level member, you'll also get daily trade updates. Each day I post the trades that I've placed. Right next to the posts will be a new tab that will pop up. If you become a Legend level member, it will say membership, and you'll be able to see the trades that I've placed. And I share those trades before the market closes, usually between 2 p.m., 2:30, somewhere around that range. Okay, let's get back to the stocks here. Let's start off with Oil K, which is an ETF that I've been following for a little while now and sharing with you guys as it's been moving up over this time. And it's one of the few, by the way, that has a blue flag, right? Just 2 out of 18 that I'm going to discuss here have a blue flag. What does it mean to have a blue flag? It means that it looks technically sound on both the weekly chart, where price is above the cloud, above the moving averages. The Chiku span is above price, okay, on both the weekly and on the daily chart. And it does get that blue flag, which means that, okay, the long-term chart tells us it's still looking strong, and so does the daily. Now, looking at that weekly chart, we did pull back this week, obviously. But I want you to notice also on this daily chart, the type of candle that formed here. It's a hammer. Of course, what that represents is it's actually bullish after prices pulled back. When you see something like this, it means that the bears pushed the price all the way down to that bottom level where the wick is. All right, the low there was around 51.33, and then the bulls pushed it right back up. And look at this on the 3-minute chart for Oil K. So there was the opening price, that dotted green line right there. Price dropped, and again around 11:15 a.m. Guess what happened? The buyers started coming back into oil once again, didn't they? And then by the end of the day, it was up 3.3%. Interesting, right? So where the index ETFs were dropping in the late afternoon, Oil K was moving back up again. The safer bet. XLE, energy sector. Let's look at the daily chart here. This is another one that also has a blue flag. This one too, I mean, it just gapped down to the Tenkan-sen. It also touched the 57.88 level, this prior high here. And then the buyer stepped back in. Look at the 3-minute chart. Here was the opening price, that dotted green line. So there's the prior day's close, the dotted red line that you see right there. You can see these lines automatically pop up when you switch it to a shorter time frame, like the 3-minute chart. So there's the closing price right there, and it dropped significantly, right? About 2.32% or so, 2.2%. And then what happened? Price started getting bought up. I mean, or the energy ETF here started getting bought up. It came up to the 200, declined, but then continued to move up. And so from the low, it actually moved up approximately 2.8%, even though it was only up 0.54%. So just keep that in mind, right? It spent the rest of the day moving up. Let's see what it looks like post-market. It's up 0.54% at the close at 4 p.m. Let's click on the post-market button here. 0.52. All right, it's around the same. It hasn't really moved much. All right, let's keep going. Let's take a look at the next one. So that's the daily chart. There's the weekly chart. Okay, all-time highs for energy. I mean, this ETF is still on fire. Okay, AAL, American Airlines, up 3.77%, but currently under the cloud. We do have a future bullish cloud. Single span A is still above single span B, so we're still in a consolidation area here for the American Airlines. Nothing to do here. I certainly wouldn't be adding any positions in the airlines while this whole situation is happening. The Alaska Air Group here is also stuck in a consolidation, finding support at least around these like levels. Like you can see this level here. It's got some support around $33 as well, but it just doesn't look particularly healthy here. Delta Airlines also still technically, we have a higher high here, but it did drop, and it basically came up today, up 2.69%, but you can see it's more likely to drop again tomorrow. Okay, it's most likely going to drop. Came up, retested the moving averages. In fact, it opened above it, and then it dropped and closed under. IPI, what does this one look like? So this is Intrepid Potash Inc. It's in the agricultural inputs. This one pulled back. It's stalling at the Kijun-sen. I think this has a higher probability on the weekly chart to move up next week and this week. Here's the daily chart. It's been stalling here after this little pullback. But overall, the trend is mostly strong, except for the fact that we've had this pullback this week and last week too. It's dropped. That's more of a bull flag as far as I'm concerned. Okay, so I think that we're going to see probably a pop up, but it just hasn't materialized quite yet. NTR, same situation. It's in the same industry, agricultural inputs, higher highs, right? We've pulled back. Now we're getting a doji, which is a reversal candle. So I think there's a higher probability tomorrow that we're going to see it move up, but I wouldn't be buying it or adding positions here while it's still under the moving averages. And by the way, if I show you NTR on the weekly chart, it's still relatively strong, except for being under the Tenkan-sen for a couple of weeks now. It seems to be stalling right now. Okay, RCL Royal Caribbean. This is still inside the Ichimoku cloud on the weekly chart, and on the daily chart, it popped back above the Tenkan-sen. Nothing really special happening here for RCL either. I don't expect that these leisure stocks are going to start taking off now all of a sudden based on today's news. UAL, United Airlines, same thing. It popped up a little, 4.46%, but then it gave a lot of that back. You can see there on the, if we look at the 3-minute chart, similarly to the S&P 500 at around, let's see what time, 11:18 a.m. It's from that point on, it dropped 2.12%. So it gave away a little bit. US dollar, how's that looking? Let's look at the daily chart. I mean, you know, it's a place where people go to for safety, and it pulled back, found some support at the 200-day. It's most likely going to bounce here and continue moving up based on the daily chart. Okay, weekly chart, it's currently inside or under the cloud, so we don't have both time frames giving us bullishness here for the US dollar. It's certainly not something that I would be adding a position in. I wouldn't be buying the UUP ETF, but holding positions in US Treasuries isn't necessarily a bad idea in this environment. Having some money invested in the US Treasuries. XLB, materials ETF, is under the cloud. Okay, clouds just turned bullish on the daily chart. What does the weekly chart look like? It's still technically bullish overall on the weekly chart. We've got a higher high here. It's pulled back. It might create a bullish harami here this week. All right, if XLB can continue moving up, and then we might see a pop up. I think I'm a little bit more bullish than on XLB than I am some of the other sectors. Like financials, I'm not really that bullish here. On the weekly charts, pulled back. On the daily chart, still in a very embedded decline. Industrial, same situation. It's under the cloud here. It doesn't look particularly great. But the weekly looks a little better on the industrials. I like the industrials too overall. It's just under the Tenkan and just under the Kijun barely right here. But it moved up 0.85. XLP, this one has potential to bounce as well, the consumer staples, and that would make sense in this environment. Here's a weekly chart. Here's the daily. Finding support at the 200, but it's still under the cloud, so it's not the time to get in. Real estate, same situation. This is actually where it looks worse because it dropped. It's under the 200. On the weekly chart, we're also finding some support right at the cloud, so that's good. Utilities, XLU, finding some support right there in between the two moving averages, but not the time to get in. XLV on the weekly chart is under the moving averages. On the daily chart, it is. It looks like it just closed under the 200 on the daily chart, but it did not close under the low of this candle. So I wouldn't, I would say we need a little more confirmation there. XLY popped up, the consumer discretionary, touched that Tenkan and dropped, even though it was up 2.21%. So that's also a reversal candle that you're seeing there. And then we've got some member requests, guys. Let's take a look at these stocks. 1, 2, 3, 4, 5, 6 stocks. So we're going to look at here. Let's make this a little bigger. Start off with MTZ, Mastic Inc., industrial sector, engineering and construction. Looking at the weekly chart, very strong chart. The cloud is bullish. This is the type of stock that you want to be looking at. Okay, companies that are showing strength in times of weakness, where the majority of the indices are dropping, these stocks are outperforming. That's why I said it's a stock picker's market. All right, and so you can see this is doing pretty well. Now, it's not necessarily in the ideal sector currently, because energy happens to be the ideal sector, but this particular stock is outperforming compared to its other stocks in the industrial sector. I like it. Nothing negative to say about this on the daily or the weekly. Their next earnings are on May 7th. Okay, the PEG ratio is very good, 1.28. The price of sales is very good, 1.18. You've got, this is a $23.7 billion capitalization. Sales growth rate is 17.34% over the last 5 years. And the operating cash flow of $545.7 million is also bullish too. So I like the fundamentals. I like the technicals. Ideally, what you want to do is find those stocks where the fundamentals and the technicals are on your side. It's like having the wind on your back. You can allow that thing to just keep going. NAUT, Nautilus Biotech Inc. This is in the healthcare sector. Biotech, again, not one of the best sectors to be in currently because it's not like outperforming energy, but this particular stock is doing well. NAUT is the ticker symbol. You can see that the volume is starting to come in here these last couple of days, especially the volumes, it's actually double that from Friday, and Friday's was double that of Thursday's volume. You can see the volume increasing. You can see the ADX, which represents momentum, is increasing and moving to the upside. The positive DI9 is moving up. Negative DI is moving down. That's all bullish. And we also broke through this prior high here. Okay, so this looks very, very bullish. I like Nautilus on the daily and on the weekly chart. Look at the weekly chart too. I mean, this is a stock that at one point was at this level right up here around 25.97. That was back in 2021. Okay, and it has dropped quite a bit since that point. Obviously, it had reached some lows down here around 70 cents per share, and you can see what happened here. There was a little bit of accumulation, consolidation that took place right there. Very, very tight consolidation, right after a big drop. And then what happened? Once price broke through that consolidation here, it continued to move up, right? We saw the volume coming in. We saw the directional movement index becoming bullish right here, right? And bada bing, there it is. There's the move up. Broke through the cloud, broke above the cloud. It created another consolidation. They call this a base to work off of right here. That's a base right there. Boom, continued, and it's continuing. And I think this is going to do pretty well. NAUT is looking good. I'm not too familiar with their fundamentals. I haven't really reviewed those. You would have to do some research on the fundamentals, and what's causing this company to be moving up. I mean, it was up 19.47%. It's not something that's in my portfolio. It's at $3.62 per share. It's a little bit more risky when you're buying stocks that are this cheap, but right now it does look good. AAOI, Applied Optoelectronics Inc. in the technology sector, communication equipment. Here's one that looks great on the weekly chart. It has pulled back a little bit, but it's holding up above the moving averages. It's above the cloud. So above the moving averages, above the cloud. The Chiku span here is above price on the weekly. We've got the directional movement index looking bullish for the most part. The green line is above the red line. I'd like to see that moving up, the green line moving up and the red line moving down while the ADX is moving up. But I think it's just pulling back a little bit, taking a breather here. And it's probably going to pop again. Here's the daily chart. Yeah, you can see that it's kind of sitting, taking a little breather right on top of that Kijinsen before it takes off again. So I think this looks pretty good. I like this one overall. Now, their profit margins are negative 8.39%. So you have to take that into account if you want to be even investing in a stock that is not profitable yet, essentially. Okay, you're taking a higher chance, but this is a really high-priced stock too, $95. Their sales growth rate is 11.43% over the last 5 years. Their PEG ratio is really good, 0.58. That's really strong. Price of sales is a little on the higher side. Okay, let's keep going. AGX, Argon Inc. On the daily chart, it just today got under. This is the industrial sector, engineering, construction. It got under the Tenkan-sen, but overall, it's a very strong uptrend here. Okay, it's probably just a one-day downturn. I think this is probably going to pop back up. Here's a weekly chart, very strong uptrend for Argon Inc. I like this one. MGN, Megan Holdings Limited, industrial sector, engineering, construction. This one here, there's not enough data on the weekly charts for the cloud itself to form because it became public here back in September 2025. So it doesn't really have a lot of history, right? I mean, if you switch it to a monthly chart, there's probably nothing. There's like all you see is that Tenkan-sen forming, the 9 period. Isn't that interesting? But when we switch it to, let's say, a 4-hour time frame, now we've got a little bit more data, and we can see how it's doing. Here again, here's a daily chart. So the daily chart looks pretty good, except for today, which you can see the bearish engulfing pattern, down 12.77% today. It's possible that it's going to pull back some more because it does have some room to drop. It could drop another 10.39. This is a risky one because, again, it's very volatile. Well, it's a little bit more volatile than most stocks because just this drop here was a 12.77% drop. And if it was to drop just a little bit to that level, to 374, that's a 9.65% drop. Again, it's mainly because of the price. It's $4.10. So, but the daily chart, the overall picture looks good on the daily. If we look at the 2-hour time frame, you can see that it broke under the Tenkan-sen. We switch it to a 30-minute chart. It's still above the cloud. It could find a little bounce here soon. But right now, I would not be adding it until it starts to show more strength on these shorter time frames. If you're thinking about holding this position or adding it to your portfolio, you have to be really careful with it. It's more of a stock that I would probably day trade versus hold, because I just don't like that much volatility day by day. SDCI. Okay, this is the USCF Summer Haven Dynamic. Now let's look at this start off with the daily chart. It was doing really well here. It was moving up quite a bit. As you can see, it got above the cloud back here on January 20th, 2026. Since then, it's up 12.49%. Moved up, dropped, found support at the cloud, bounced off the cloud, came back up. Now it looks like it's pulling back some more, and it might actually pull back a little bit more in the commodity strategy. No K1 fund. So it could drop maybe as far down as the Kijinsen before it finds some support. That's another 4.6% from where we currently are. And here is the weekly chart. Overall, it's a strong uptrend on the weekly. So if it depends on how long, what your time frame is. Are you someone that's looking to hold positions for a long extended period of time versus like be in and out of stocks? If that's the case, what you want to do is focus more on weekly charts than daily charts. That way you only have to look at the chart once a week. The daily chart can help you pinpoint a more optimal entry, right? That's the idea. But the weekly chart should be the main driver behind your decision to enter a position, in my opinion. That's why every position that I have, it must meet the criteria, at least when I'm entering the position, to be bullish on both the weekly and the daily, right? And then from that point on, I know that the stock is going to fluctuate. It's gonna move up. It's gonna drop, and then it's up to me to manage that trade, recognizing that it might pull back. We might have scenarios like the one that we currently have right now with the war in Iran that's dropping a lot of stocks, right? And so there's ways to basically also protect your portfolio through hedging, how to hedge your portfolio. And so I've shared one of my strategies with Legend and Blue Cloud Trader level members in the video that I posted this last weekend and the weekend before. If you guys, again, want to find out a little bit more about that, let me just show you guys how to get access to that again. Here we go. Right here, click that join button and become either a Blue Cloud Trader or Blue Cloud Legend level member. Try it out. You might like it. You might just like it. What else? What else? The other thing also, if you haven't subscribed yet, please hit that subscribe button. It helps the channel. It pushes it out in the algorithm so more people can get access to this video. I'm trying to share my knowledge, with more and more people. And we're at 28,600 subscribers. By the way, there's more links here. Let me just share some other links. Like, there's a description right there, by the way. So if you click on and 10 more links on my Blue Cloud Trading homepage, and you scroll a little bit down, you can also find that join button here at the top by becoming a member. That's the very top link. The second one is the $25 coupon for TC2000 software. That's this software here. If you like this charting software, it's fantastic. I mean, you just type in anything, any company. Oracle? All right, there you go. I'm typing in Oracle. Look how it pops it up right away. ORCL at the top. Bam. It's as simple as that. And you can quickly see it on multiple time frames from monthly charts, from actually yearly charts, monthly, weekly, daily, you can set it up too, by the way. You can change these time frames at the top. If you want to edit those, you can do that. You can see here, you can even do it by ticks if you're into day trading more. So there's a lot of options there. And to get access to that software, click on this link here and you'll get a $25 coupon. All right. What else, folks? FinViz Elite. Maybe you like this other software that you see me using all the time. It's this platform right here. I like this a lot. I use it a lot. It's the FinViz Elite. Now, there's a free version of this, but the FinViz Elite allows you to also add the Ichimoku indicator. So you can have the charts like this here. Boom. There's the Ichimoku. Let's take a look at let's see here. I gotta type it up here. SPY. Oh yeah. Look at that turnover in the S&P 500. Does that look healthy? Whew. Not so much. Right now it's actually showing aftermarket too. 6:21 p.m. as I'm recording this. So what's going on? Is the market dropping more? Let's find out. SPY. Let me throw on SPY here for just a second. So this is where it was. It was at the SPY ETF, which represents the S&P 500, was at $655.38. It closed at that level. Where are we at now? Include post market. We're up. Let's see, 1.1%. Okay, so it hasn't really moved. It really hasn't moved post market. You know what else I forgot to show you guys is the heat map on this. Let me show you that real quick. So that you see all the different things you can do. It's got a screener. So you can screen stocks based on fundamentals, technicals, news, ETFs. If maybe you want to only find specific countries, and it sorts through 10,954 stocks. That's a lot. But let's say you only want to find, I don't know, maybe you just want to find stocks that are foreign except the U.S. There's 1,300 right there. All right, then you got the charts. You've got the, we already talked about that. Here's the heat map. So this is what it looked like today. That's the one-day performance. Let's look at the 1 week performance. Ooh, doesn't look so pretty. What about the 1 month performance? Right? Look at energy highlighted there. Some of the technology stocks have done pretty good over the month, like Oracle, Palantir, PANW, CrowdStrike, XYZ. Let's look at the themes today. We can do that. We can look at specific themes. It looks like grains and oil and gas and LNG biofuels right now. Aftermarket, they're up. Gas and LNG is up 9.63%. Oil is up 13%. Wow. Look at that, Monday, 6:23 p.m. Transportation, logistics, not looking that great. Crypto's up a little bit too. Interesting. Bitcoin. Let me show you guys the Bitcoin ETF, BITO. Whoops. Here we go. Okay, I mean, it's up 0.52%. It's still kind of stagnant. It's consolidating in this little range here. I think it wants to break through this little box that you see here. It wants to, but it's reluctant until there's more risk that comes back into the market. I think it's going to be in this little range for a little while. All right, what else, guys? And the other thing. So yeah, there's the link for FinViz Elite. Click on that link if you're interested. There's some other links to my Twitter page here. Check that out. That's where I post some articles and other posts throughout the day. And yeah, that's all, guys. Thank you for watching. I appreciate all of you. Have a great rest of the night. Later.